Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. We welcome all of you here today on this July 9th. Myself, James Boyd, and we also have Cameron May in the chat. We welcome him. You'll see on the screen there, you can follow Cameron at Cameron May CS. You can follow myself on X as well at James Boyd CS. We do post educational content there daily, so check that out. And also announcements. Now, we also have Sandy with us, Kevin, Stay Gold, WW, Silas, Austin, and many others, and Grace. Okay, welcome to all. Now, remember, if you have any questions, just go ahead and ask those questions. Cameron's going to be watching those questions full-time in the chat. And also, I'll be looking from time to time for those questions. Now, as you'll notice, Cameron and I, when we teach, we actually tend to look directly at the camera because this is not a presentation. This is a conversation, okay? And so we want to have a conversation as we talk really about trading growth and value stocks. And from time to time, I'll look to my right to see if there's any questions, but outside that, it will be a conversation. Now, just real quick as we get started, the information here is provided for general informational purposes only, not a recommendation of individualized recommendations or endorsements of any particular security, chart pattern, or investment strategy. So we're going to show some different chart patterns. We're going to show some different chart settings. You can pick whatever you want, okay? Some of the charts that I have, you might not like those. You might like different charts. That's fine. Then you can make your own chart, okay? And so we'll talk about why we use the settings we do and why. Also remember that Schwab does not recommend the use of technical analysis as a sole means of research, hence this class. And also remember that our examples will be used on the Paper Money Thinkorswim software-based version. So when we do our classes, a high majority of the time, we're using that software application. It is not the only way you could do trades. It is a way, but there's some reasons why we use the software. Also remember that there's risk associated with investing. With dividend-paying stocks, they could cut the dividend completely. They could cut it some. They could even raise the dividend. So just understand with a dividend-paying stock, it's not indefinite. Also remember when we talk about investing, investing involves risk. Now, today what we'll talk about is we want to kind of take a look a little bit more at growth. I said this last week, I said sometimes when you teach a class, sometimes there's better examples than others. And I want to kind of talk about that further here today as we kind of have seen some examples of some stocks that have been breaking out. And there have been some stocks, if we said what type of price pattern is most prevalent in the market right now, we'd probably have to say a short-term ascending triangle. We'd probably also have to say a pennant pattern. And if we talk about what type of sectors are actually getting the push, they're really kind of more pro-growth sectors than, let's say, value and or income, okay? So we talk about growth. This is not new. We say it all the time, technology, discretionary communications, right? You could even throw in energy there. You could throw in materials as well. Something that actually has, let's say, growth probably double digit on the revenue and earnings per share, okay? Something that's not just like utilities or staples or healthcare, non-biotech. Those tend to not grow as fast typically. Now, also they tend to trade with a higher price multiple. The growth names do. Not all the time. We actually seen historically where the utilities, some of those staples, they were trading at a 35 PE. So everything can trade at a higher PE, especially if the market is more bullish. What I want to do first here is let's go take a look at this. Probably the ticker of the day to start off is really the VIX. The VIX, if you take a look at that, is down at the 15 level. Now, yesterday when we pulled this up, we said, if you looked at, let's say, the volatility of the S&P, it's only literally at 8, okay? If you looked at the volatility of, let's say, the NASDAQ, it's only at 7, okay? So if there's a lot of fear in the marketplace, boy, with the VIX at 15, it's hard to see it, okay? And what you're now going to notice is if we look at, let's say, some of the trends, one of the trends is kind of standing out a little bit for you that like smaller caps. Not everyone does. It's the Russell has actually been quite strong. We'll look at the Russell in relationship to the 10-period moving average in just a moment. The NASDAQ kind of re-firing back to the upside. You're seeing the S&P in trend 4 and trend 4 for the Dow. Trend 4 just means prices above both moving averages. The 10 exponential, okay, and the 30 simple, but it's up near an area of resistance. Now, up near an area of resistance doesn't mean bearish. It just means that it could be pausing and forming a triangle. Speaking of that, let's go ahead and actually just bring up this chart and show you what I mean. So if we look at this chart, what you're going to see is if we were to pull up, let's say, the Russell, RUT, and we might say, well, why does the investor even care about the Russell? Well, we kind of use it for a proxy for, or it's not the only way, but it's a way to kind of look and see, are market participants wanting to take risk? If they want to take risks, they go buy the asset classes that actually have a higher, if the economy were to grow, these might be some of the stocks that might go up at a higher percentage. Now, it's not the only variable there. If you take a look at, let's say, what's happened in the last couple of days, you're going to notice that we've been using the 10-period moving average as a potential support, okay? So the Russell, even though it's kind of gone up and down a little bit, there's been really that trend 3 candlestick, price above both moving averages, and you're going to see that it's just in the shorter term, in the last 4 days or so, kind of a very short term, like pennant, ascending triangle, okay? And I'm going to say it's more like a pennant because there hasn't been a whole lot of horizontal on that, but a little squeeze breakout to the upside if you like to see the short term. The SPX, if we take a look at the SPX, now, remember what we said earlier this week. The market had gone up, and when we see up, we're just looking at the green candles. The green candles are just really the pole of a bull flag formation. We really saw over the last couple of days it kind of like pulling back. The never even breached the 10-period moving average. I know that's music to your ears. Keep singing, okay? And if we take a look at this, a little orange candle, as we're starting to kind of form a shorter term consolidation. And remember, if you pull back and you don't even breach the 10-period moving average, could this be a bounce? That's the idea, okay? Now, when we also look at just fast, the NASDAQ, yeah, you have to say the NASDAQ, if I zoom in on that, after a little bit of a pullback, that's a short-term brand new high. Now, the reason why we looked at the 161 fib extension is this is where it broke out. We broke out at the 100% down there. We extended to that area over time. And could this been where we actually had a little pause and now we're starting to push again? Of course, if you're thinking about the NASDAQ, you're thinking actually about what about those semiconductor stocks? And the semiconductor stocks have been riding the 10-period moving average like a rope, okay? Now, I want to kind of say this again. If you don't like the charts that we have, make your own. Free country, okay? The reason why we use the 10-day exponential, it probably is one of the better durations of moving averages that if you're trying to track momentum, it gives enough slack to allow fluctuation in price, but also that the 10-period exponential moving average can act like a potential support. We use the 10-period exponential moving average to see momentum. Now, question kind of gets brought up. Do you look at candles first? I don't look at candles first. Candles are only looking at a day. Since I'm not just looking at a day, we're looking at days, plural. And that's why these moving averages are not just for a day, okay? And so when we look at the 10-day moving average, we're looking at the direction of it, which is inclined up. And we're also looking at where's the price in relationship to the moving average, okay? And if you take a look at that, it's been a nice little gauge of momentum, which also tells us something about trend, especially if its price is above it. And if we look at where that was today, the SOX, that was a brand new high. Of course, if you're thinking about semiconductors, you're probably thinking about NVIDIA, which actually hit a brand new high here today and hit a market cap of $4 trillion. Now, let's look and just see just real quick. Now, the comment really from Pia was regarding some of the trade examples that we did. Now, this class is a stock-based class. The disclosures that we had were stock-based. I cannot comment on the type of strategy we talked about on Monday and Tuesday. We'll talk about that on Thursday, in the class on trading the trend. So Pia, I'm going to kind of put that book on the shelf, but just know that we'll talk about that tomorrow at 1 p.m. Eastern, okay? Now, I want to kind of talk about just real quick a couple of sectors that kind of stood out a little bit. We actually saw industrials, brand new high. Can you think of any industrial stocks that have actually been benefiting from the sector breaking out? Or is there a stock that's industrials based that's dragging the sector up? Now, guys and gals, you should know this. We've been talking about industrials, and we've been saying the same comment over and over and over again, okay? Which is, it's pretty hard to have a recession if industrials and financials are hitting a brand new high. How many times have we said that? At least 10, okay? Now, if you look at that, that was a brand new high here today on industrials. Which stocks led that move? Technology hit a brand new high. Transports hit a brand new high. Uber, if we take a look at that, also hit a brand new high. We've been talking about the Uber because that's the biggest stock in the transport space. And you're going to also see that Love, when we talk about transports, is not too far behind. It's one of the leaders in the airline space. If you've been watching airlines, keep an eye on that one as well. So we said transports, we've been saying that. Uber, which actually hit a brand new high. And then Love is actually the one that's leading in the airline space. I did not look at Alaska Airline. I was actually making the comparison to Delta and United Airlines. If you want to look at Alaska, feel free and actually see where that's at. The other one we got to bring up just real quick is Basic Materials. Basic Materials has also been pushing to the upside. Yesterday, the White House curbed the imports of copper, okay, by 50%, or put a 50% tariff on the import of copper, shot up copper prices. We talked about those last week, and you're going to see that now that's not the only thing that's been pushing that space, but even Base Materials getting involved. You just got to remember, Base Materials is only 3% of the S&P 500, so it's not a huge weighting like technology or something like that, but getting a little push. We talked about energy stocks yesterday with crude oil getting a little bounce. The reason why I kind of bring up these sectors is, a lot of investors, they like to kind of see breadth or more participation than just one or two sectors. If you can get 3 sectors pushing, good, okay? Which type of sectors? You like to see the growth ones. But if you can get 5 sectors going up, maybe 7 that are grinding to the upside, a lot of investors say that's more participation. Now, you got to remember, the stock market is about capitalism, not socialism. Not everything's going to be going up, okay? So it ain't always going to be fair, okay? No one said the stock market was fair. It's just looking, where do investors want to invest? And sometimes they don't want to invest in all sectors. That's okay, okay? It's okay. Now, let's kind of talk about some of those stocks. And I want to kind of just pull up just real quick the Dow stocks, okay? Now, the nice thing about the Dow stocks is we're just talking about 30 stocks here, okay? So it's hard to kind of feel like when you look at the Dow stocks, you take a look at those stocks, it's just a list that's made for us. Now, we're just kind of wondering if I actually pulled up the Dow stocks, and it's a list that's pre-made for us right in the Market Watch, quotes, go down to Dow Jones. And if we kind of looked and said, is there any stocks, and what we're going to do is we're going to kind of look at this on a percentage change. We could rank it from top to bottom. Or what we could actually do with that is we just rank it by the RS5. The RS5 is just saying what's the relative strength of these stocks compared to the S&P over the last 5 days or 10 days, 21 days, and so on. Now, when you look at which stocks are leading that charge, the ones that are in the green, and you're going to see which ones are, and it's a small list. It's probably about, what, a list of 9 stocks or so? And we're really talking about everything from Chevron to Microsoft. Now, in our discussion here today, I would like to kind of take a look at a couple of these stocks. Now, are we saying that these stocks, they're guaranteed to go up? No, they've been showing a history of going up. Now, could the investor look down here first and then say, I wonder if the trend could stop going down and start to go up? You could do that, okay? Do you do that? Do you? If those stocks were really turning around, you think they'd probably be up a little bit higher, but they're not yet. So it's not saying the bottom can't start to come up, but at least they're not showing that. The key word is yet. Now, what I want to do is I want to take a quick look at, let's say, a stock, and I'm going to go back to, now the charts that we've been using, we just call it the package, okay? And the package, when you take a look at this is just a standard chart, just price action, okay? Now, what we could also do with this is if we said, hey, can we put the whole moving average on there? And there you're going to see it right there. Now, there was a comment that was made kind of regarding what is the shading for? Is it relevant, etc. So before you even look at what is the candlesticks doing, the purpose of the shading is just to tell us, is it bullish or bearish? That's the point of the shading, okay? The shading is if we get the 10-period moving average, that's the 10, this is the 20. If we get the 10-period moving average greater than the 20, there's green shading. Who cares? Well, the investor cares, because if there's green shading, okay, let me just kind of put that right there. If there's green shading, what type of trend would we be having at that moment in time? There's an uptrend, okay? So you do not need to have a PhD in trend analysis or candlestick analysis to know that. So the purpose of the shading is just to see, is the 10-period moving average greater than the 20? If it is, green shading. Last but not least, if we actually saw the 10-period moving average lower than the 20-period moving average, red, okay? And you actually have what type of trend at that point? Downtrend, okay? Now, so the whole point is when someone tries to put a position on, they're trying to put a position on when there's green shading. Yeah, but you didn't talk about individual candlesticks. You did not talk about volume. That you're right. Okay, I didn't. Because when you look at, let's say, getting in, it's not just about one price bar. It's not about 1 day of volume or 2 days of volume. We're looking to see what the trend is. And the trend is not something that is over the last 1 or 2 days. It's days, plural, weeks, plural, months, plural, okay? And so that's the purpose of that. You don't like that, don't have it on yours, okay? For me, I like it, so I'm gonna keep it, okay? So you put whatever you want on your charts, and that's really important because it comes down to just understanding what's on the chart and also just being comfortable with it. Speaking of being comfortable, let's actually go to look at BA for just a moment. Now, if we look at BA for just a moment, we're talking about Boeing. And if we take a look at, let's say, Boeing, I'm going to kind of just draw a line here. Now, when we talk about, let's say, charts that are upward trending, sometimes you see this pattern like an ascending triangle. It could be a cup and handle. I mean, this is just frequent type of like price patterns. Now, the duration of those ascending triangles, which tend to happen in uptrend, or a duration of a cup and handle, that can vary. It doesn't matter. An ascending triangle is ascending triangle. Cup and handle is cup and handle, okay? Now, the difference between shorter term or longer term ascending triangles or cup and handles could be maybe the way it could matter, if you said it could, is really going to be maybe the price measurement technique / the target. But the trend is the trend, okay? Now, what you're going to now see is this was a brand new high on Boeing here today. Now, the investor might say a comment like, dadgummit, we missed it. Now, Boeing for just a second. When you take a look at Boeing, we've been talking about over the last couple of weeks about a history of companies that have fundamentally struggled, and we're just kind of wondering if the business could be turning themselves around. Now, what you're going to notice now is when we take a look at this in 2020, 21, 22, 23, you're going to see that they were kind of trying to reverse that course of being negative earnings per share. Now, I don't know how many CEOs we're on now. I think it's on the third CEO? We're on at least the second. And what you're now going to notice in 24, they also had more write-offs done, okay? Now, if we take a look at quarterly to see, are we starting to kind of see a little turn? Now, you got to remember, technicians, they speculate that the business is starting to turn. They're watching that price action. You also got to remember something when you look at the fundamentals, especially like earnings per share and revenue. We're talking about these are historical numbers, but they're price checks, if you will, of how is the business doing. If you take a look at the quarterly numbers, what you're now going to notice is we almost in Q1 of 25 went positive. Now, if you take a look at some of these other numbers like sales per share, we could also see those right there. And we're looking at for 2025. So the big thing is, are investors starting to speculate, could Boeing be starting to return profitable again? A lot of investors, they don't wait until that confirmation. They start to speculate. That's why they're called investors. Okay. They put the seed capital in prior to knowing for sure, because that's when there can be the biggest percentage change, perhaps, in the stock price. When they confirm that it's now more realized to what investors thought could happen. Okay. Now, what I'm going to do is, if you take a look at this, we're going to right click on the price graph. We're going to go down to buy custom, and we're going to go with, take that back, right click there. We're going to go buy custom with OCO bracket. Now, if you take a look at this, we're doing shares of stock. Now, let me go right back to that paper money account. I'm going to just bring up that Boeing right there so we can put that in, Boeing. And then what I'm going to do is I'm going to right click, okay, buy custom with OCO bracket. Now, when we do this, what I want to do is, does every stock need to have a target? Not necessarily, okay? Maybe you're trying to ride that trend. Now, I do think it makes sense, though, to also see kind of what is that longer term price action looking like. We're now looking at a 3-year weekly chart. Why do we care to see this? Well, sometimes these over 3 to 5 years, you can really actually have these prior highs. We can see that right there. We could also see another high right there. So the reason why we look at a 3-year, 5-year chart is we're saying, could these highs or resistance levels become where maybe that stock might try to consolidate at those areas again? Investors remember that. Investors can see that. So if we said, you know what, I'm going to put that target right at 239 and change, we're not saying that's all it can do. But you better believe there's probably going to be some traders, their names could be Bill, that might use that past behavior of investors selling, and they might try to repeat that pattern. Okay? Now, if what we're going to do is put a target right there. Now, underneath us, what we're going to do is zoom in and say, where was that old resistance? Now, the old resistance was right around 218.51. Now, this maybe is a little premature because we said this was old resistance. We're just now assuming that's new support. We haven't really tested that yet, but a lot of investors will say, look, I'm speculating. That's not a 4-letter word, by the way, speculating, hunch, maybe if you want to call it. Let's say the investor said, I'm going to put the stop less 2% underneath that 218.51. Now, if you take a look at that, what's the price? It's 214.13, okay? Now, the big thing is here, a lot of investors are going to say, yeah, I saw industrials go up, but I want to have my secret hot sauce list on industrial stocks. Knock yourself out. What you got to remember, though, is you can make your secret hot sauce list of industrial stocks. You just got to remember, what are institutional investors investing in? They're probably going to, they are like they are the aircraft carriers, the military battleships, okay? If these institutional investors get in, they need a pool of water, liquidity, that is deep enough to put their boat of capital in, okay? So when you said, hey, which ones in the industrial space have high liquidity, at least 1 million shares average, 5 million, 10 million, where not only the stock is liquid, but maybe also the potential derivative as well. And all of a sudden the list gets really small in a hurry. And so that's why some investors kind of focus just on the bigger names. You can do what you want. Now, if we take a look at this, we're going to go, this is going to be in the IRA account. You're going to see that we have a target price. We're not saying that's all it could go to. We're just putting that first area. If we go up to that first area, we're seeing that the industrial sector is still quite strong. Could that investor maybe raise the target to the secondary area? That's a thought. And we're going to put the stop actually underneath. Now, what we're going to go ahead and do is send the order. Now, and I'll fix that. The one thing I want to kind of say here is there was that crash in India, which was horrible, okay? Still ongoing in terms of the investigation. The reason why I bring that up is that the stock has really gone up after that. So it's like the stock is going up like just after some potentially bad news. We don't know what happened for sure, or who's at fault, whatever. But it kind of reminds me of when CrowdStrike had that outage with Delta, people stranded at the airport, and pretty much after that bad news, it was the low on the stock. So sometimes when you see a stock going up after some bad news, that could be for some investors, maybe an indication of bullish sentiment and speculation, okay? So just remember that. Now, I want to kind of just take a quick look at just a couple other stocks. And I'm just going to bring them up. One of the stocks is kind of doing like a symmetrical triangle or a pennant pattern is Raytheon. Now, when you take a look, let's say something like Raytheon, what you're now going to notice is here's the trend. Now, notice when we draw trend lines like support, resistance, it's not just what's happening last day or two. We're talking about days, plural. This is one of the stocks, if you're a MACD person, like some of us are, some of us like to kind of see the MACD turning up. So what we're doing is we're looking at where do we get that light red and burgundy together, light red and burgundy together, and are those troughs on the MACD actually getting higher? If the troughs on the MACD are actually getting higher, as noted there or drawn, this is probably an increased indication that maybe the breakout could be potentially imminent. Now, let's kind of just say for just a moment, we got earnings coming up. Some people might take that, oh no, it's earnings coming up, it's horrible. But we got to know that some people like to use the earnings as maybe a reason or to speculate to get in of what those earnings could potentially be. Okay, now if we went back to just real quick the 3-year weekly chart, that's what the trend is. When we actually go back to, let's say, the 1-year daily chart, what I'm going to do on this, since I've had some comments on this, I'm just going to put a buy stop. Okay, now the buy stop is just saying, look, get in if we take out today's high. I'm going to right click on the chart. We're going to go down to buy custom, and we're going to go with OC. I'm just going to do with stop. Okay. Why am I only doing that? Well, because there's other stocks I want to get to. So this buy stop, which blows people's minds, is really saying, look, don't get in until we get to this price or higher. Okay? Data GTC. Now, that blows people's minds because they're like, wait, what am I buying it for? I mean, first of all, that blew my mind that we're going to buy it if it goes to that price or higher. I like to buy it lower. Okay? Well, we're trying to catch the breakout. The other thing we could do is go stop limit and just kind of put like a cap price 50 cents above. So that way there's a ceiling on what the stock could be purchased for. Guys and gals, this is very important. Think since 2012. Think about how many stocks or the market made brand new highs, and if they just got comfortable with just doing buy stops and buys, getting emotional. Okay. Like yourself. Okay. But think about how many times everyone's just looking for the price to go down. But what if you actually said, geez, instead of the stock actually going down, what if I want the stock to go up and I'm trying to catch that surge in price? That's not guaranteeing the stock is going to keep going up. Would be nice. But sometimes they actually go up to that price and then like a little bottle rocket firecracker, they go up and then they fall back down. And that's why the investor position size and sets a stop. Now, what I'm going to do is I'm going to set the stop right underneath 144, which is the trend line. And what I'm going to do is go less 2%. And that's going to be at 143.02. Okay? Now, I even have a good friend, my gosh, bless his heart. I've worked with him for years. Okay? He's been programmed to try to buy cheap. Now, it took years. Okay? I think he's now recovering of trying to buy when the price is cheap, okay? Some people don't like to buy cheap when the price is cheap. They want to catch something when there's demand for the stock. How do you know there's demand for the stock? They're pumping the price to the upside, pumping it up by hitting a brand new high. That's a hard thing for people to actually get because they're like, well, I like to buy less, okay? So I know many of you have practiced, but let's keep practicing on that, okay? Now, what I'm gonna do, since my IRA is I don't have a ton there to work with, I'm just gonna even buy, let's say, let's try to buy, if I can, I'm gonna find out, 40 shares, okay? Let's see if 40 shares will work. 40 shares of that stock, and I just wanna see if I can't get filled on that, okay? Confirm send. Remember how the stop works. We're saying if we go to that price or less, then sell it. The stop is not valid until the buy is filled, okay? I'm gonna go ahead and send that order. Now, I'm not gonna say anything on this one, but if we're talking about industrials, one of the other stocks that has kind of an interesting pattern, the inverse head, and it's not shoulder, okay? And so you're gonna kind of see a melon head, if you wanna call it that, okay? Some people that live in the South say the head is a melon. I lived in Kentucky when they would say that. I thought that was pretty funny. Okay, now, this is an unusual pattern because you don't normally see this after an uptrend, okay? I'm not gonna say anything. I'm not gonna do a paper trade on it, okay? We're gonna move on to a different sector. This one also has earnings coming up probably about the 17th, about the 18th or so. This one is also breaking out as well. So it's not just Boeing, it's not just kitty cat, meow. What we're actually seeing on this, when you look at Caterpillar, which kind of drew us into the group first, that one even squirted up to that area of resistance. And then the other one started breaking out. So it's a little kitty cat first, then BA, and then we're seeing these other ones, RTX and also Triple M as well. So in the industrial space, there's some growth going on there that's actually causing some investors to try to get in. Now, I do want to also go back to just real quick. This is like the worst for me because I've realized what I've done in this class, and then my neighbor actually says that was a really interesting class the other day. Okay, let's be serious. Let's be real serious here. Now, I want to kind of go back to something for just a second, okay? So a couple of these stocks in the last couple of days have they broke out, okay? And I think we could say, where was the breakout? The breakout was was the breakout here, okay? And if you look at this, we could kind of say this was kind of like a breakout, but it didn't really meet our definition of breakout. We talked about green candles. That was a red candle. The price does make an intraday high though, check, but it's not a breakout per the definition we talked about. The breakout was really more down here that actually met the criteria, there and here, okay, on June 26th. Then so it actually breaks out for sure on the 26th. Then it goes up and makes a brand new high, blink, falls back down. And that sheet has been in the process of carving out a potential support, okay? So old resistance turning into new potential support. And what you're now gonna notice on this, if you look at this, again, I'm looking at the kind of the shading just real quick. The color, so the 10-period moving average is below the 20, hence red shading. But if all of a sudden we get those green lines on the moving averages, could this be a candidate for actually something that could be trying to bounce back to the upside? Now, it would be nice if we could see what's going to happen tomorrow. I'm not sure if your chart shows what's going to happen tomorrow, but mine has never done that, okay? Now, so sometimes it really kind of goes back to thinking of what maybe like other investors might be thinking about. Are we in a trend? Do other investors think we could be bouncing off support? Is there a focus in the technology space, etc.? We also have a close above the high of the low day. The lowest, most recent red candle was yesterday. Okay, that was the most recent red candle. There's only one. And then push back to the upside. Now, when you look at, let's say, fundamentals, there's two groups today that bumped up Microsoft to a price target of 600, and also another company that boosted up the price target, and it's their forecast. They can't see the future either, but they actually raised the forecast of what they thought the price could go up to. Now, some people trade off that. Others want to kind of see more of a confirmation of the price going up before they get in. Now, what I'm going to do is I'm just going to set, now we got 25 minutes left to go in the market. What I'm going to do is I'm going to try to buy on the hold day. Now, if I did buy custom with OC, and I'm just going to do a stop for time's sake, feel free to put your target on here, but I'm going to use this recent plateau. That plateau is at 715-ish, okay? And if we take 715 less 2%, it's at $700.70. Well, if I go back and put that right there, there it is. Now, when we take a look at that, that's about $35 worth of risk, approximately $700 stock. It's about 5% of the entry price. Nothing really unusual, okay? If we go now, stop, good till canceled. And now what I'm going to do, I'm going to do this in the margin account because I'm really thinking that probably don't have a whole lot of capital left in that IRA to trade out of. Stock trading can eat the amount of capital quickly, okay? And what I'm going to do in there is I'm going to kind of put a position size. Let's go about 5,000 if we can. Okay, it's going to give us about 7 shares of stock. And if we did that, now I'll speak to the target in just a moment here. There's what the order looks like. Remember how the stop works. And now what you're going to see is we're going to send that. Now, when I look at the target, then we're going to go look at those fundamentals for just a sec. This really kind of has like the big V pattern, okay? And there's a little double bottom on that, just add little vinegar there to the wound. Why did I get in on double bottom, okay? But if we kind of take a look at this, let's have breakouts over time, right? Breakout, stayed above. There's the old breakout, stayed above. So you can't say it was just the bottom, okay? There's been a trend here for a while. Now, if you take a look at this, how do we know it's not actually going to, we know that Meta has done a lot of capital investment in the AI, among other things. Can that lead to actual revenue and earnings per share, okay? Now, the other thing I think we need to always remember is it's not just capital expenditure leading to potentially earnings and revenue, but like with a company like Microsoft, you know, can you get a reduction in workforce? They can also, for example, bring a maybe enhancement of earnings per share. Now, a lot of times on an annual basis, companies might cut 3 to 5% of the workforce. That might be because some of the 3 to 5% don't want to be there. That happens. People change their minds. Okay. And maybe they're also, the company's just trying to find new blood, if you will, to maybe also maybe kind of have different personnel to do different projects. It's just what it is. Okay. So Meta's done that, but also so is Microsoft. Why do I say this? Pay attention to companies that actually continue to have these layoffs and watch and see what happens technically. I want you to watch that. I like to have a watch list of just companies that have announced layoffs or, for example, have done repeated layoffs. Just watch those stock prices as an example. Now, the biggest thing is when we actually go back to this is when we look at these analyze, we go back to the fundamentals, the one thing we'd have to really say when we talk about capital investment, so you could also be looking at this, and it's been announced, this is not just a one-off, they have been spending billions and billions and billions of dollars. So far, in the last, let's say, 2 years, we have been seeing an uptick. When you compare 2024 to 2020, it's been pretty mind-blowing. Now, I know what someone's going to say here. Yeah, but I don't like Facebook. I'm not really sure if that matters, okay? A lot of the stocks we look at, you might not use the technology or the service or whatever. I'm not really sure if that matters, okay? Does it? Okay. I mean, do we have to use everything? I don't know. Okay. You decide for yourself. When we also take a look at sales, it's not just the earnings, it's the actual sales. And those sales, just in the last 2 years, when you're seeing a company that's been around for a long time, and you're looking at a company that really year over year is at 20% revenue growth, we're talking about a large cap. This is not a lightweight stock when you get revenue growth of double digit, let alone 20%. So the moral we're saying is we need to wake up. That's very difficult for these larger caps to actually have those percentages, let alone year over year, like Meta. Now, the other thing is, if we look at Microsoft, just while we're on this page, you're going to also take a look, if you look at Microsoft, they have been kind of going up at a little steadier pace. It's been more about a 10% clip. It's really been in the last year, we've been really seeing about 15%, okay? So, I mean, if you had smaller cap type stocks, you like to see that double-digit percent growth, 20% growth, et cetera. If you start saying, James, the numbers are 100% year over year, you got to ask yourself, how did they grow that much? Is it a new company? Were they negative? Having that type of growth is pretty unusual. When we look at that jump right there, that is also quite unusual as well. Just double checking this number real quick. Yeah, we're talking about 22% on the earnings per share year over year. Now you got to always say this. Does this mean that they're going to do that next year? You got to imagine as you push the bar up higher and higher and higher, it gets harder and harder to actually have those same type of numbers, okay? But the investors, if we go back to, let's say, something like Microsoft, which did hit a brand new high, which is in the paper money count, we're kind of wondering, can it go up a little higher here, okay? We're going to have to actually watch and kind of see. Yeah. So now the big thing is, so James L. says, just trade MAG 7. That's his comment, okay? I think when people look at, let's say, the Magnificent Seven, etc., it's just kind of an indication of kind of sentiment among institutional investors. We'll talk about that more on Friday morning at 9:30 when we talk about ETFs in general. But it does kind of show an indication of willingness to take risk, and also kind of a lot of those Magnificent Seven stocks, they tend to be the growth names, okay? And our institutional investors willing to actually try to get in. Now, I want to kind of just say this in closing, okay? Couple other stocks that we're going to kind of keep an eye on. One of the stocks that we've talked about keeping an eye on based upon that new asset class that keeps, the new asset class as of a number of years ago. But if you take a look at one of the stocks that has a correlation to that, we've been talking about Coin. Coin, okay, really has had a bull flag with it. We had a little run to the upside, doink, little pullback there, doink, little run to the upside, and a little one-day pullback. Look what happened here. Sitting right on the 10-period moving average. Now, some investors, they might say, James, I've seen this too many times. That's a tilted up W pattern. And could we be actually in the process of really actually getting that moving average crossover? Guys and gals, watch that new asset class we've been talking about. We'll talk about it again on Friday. If you take a look at Coin, this is kind of set up in the shorter term, a little higher high in the shorter term, now using the 10-period moving average as a potential support. Okay, so don't say you didn't see it. Well, here's the thing we got to learn, just realize. Just because people are watching something, it doesn't mean they're listening, okay? One of the stocks that we're going to keep an eye on still is Coin, okay? And also another stock that actually has a correlation to that new asset class. We're going to also keep an eye on Hood, which has been carving out a support level over the last couple of days. MicroStrategy, which is also trying to get a little turn back to the upside. We'll also include Plantronics, okay? Excuse me, Palantir. Now, if you go look at Palantir's balance sheet, they have cash and cash equivalents, and they also have marketable securities. You'll see how many of these companies have been moving their cash and cash equivalents to tradable securities or marketable securities, namely that new asset class, not just sitting in cash. Okay, so we're going to keep an eye on those 4 stocks: Palantir, MicroStrategy, Hood, Coin, and also the 5th one, that one that's trading right around 110,000. Okay, so keep an eye on that. We did about 3 trades here today, but there's a number of companies, growth specifically, that are actually getting a little moving average cross. Now, Pia, your comment that you actually said yes today, we'll talk about those strategies tomorrow at 1 p.m. Eastern. Thanks to Cameron for answering those questions in chat. If you have not subscribed to the Trader Talks channel on YouTube with Schwab Coaching, do so. Want to also kind of make mention, everything that we talked about here today has risk. That's why the investor is setting a stop and position sizing. Also remember that when we talk about examples, they were just that. They're not recommendations. And this has been the class on trading growth and value stocks. Stay tuned for Michael Fairborn coming up next. Thanks so much. Take care. Bye-bye.